I think we'll get started for today. So good afternoon, everyone. My name is Patrick Denver. I'm the co-CEO of 100% Renewables, and I'd like to extend a warm welcome to you all and thank you for joining us in what we hope will be an informative and useful discussion on empowering climate action by harnessing data and digital transformation. In a world where regulatory requirements like the mandatory climate legislation, the Australian Sustainability Reporting Standards, are becoming more stringent and more stakeholders are asking for disclosure on climate metrics, accurate data management isn't just a necessity, increasingly it's a competitive advantage. So without reliable data, you can't measure your emissions, set realistic climate targets, or track your progress towards your sustainability goals. So this webinar will show you how to harness the power of digital transformation and data to stay ahead of regulatory changes and lead successful climate action initiatives. Quick intro to who'll be speaking today. So I'm Patrick Denver, I'm the co-CEO. I've been working in energy efficiency, renewables and carbon management consulting for 30 years across strategic policy and technical areas and worked with all levels of government and business. I'll be moderating today's webinar. We'll be joined by Siggy Lendering, a project manager with 100% Renewables. Barbara Albert was going to be the speaker from 100% Renewables today. Unfortunately, she's not available. Siggy is a highly experienced and skilled project manager with a proven track record of delivering climate response projects across various sectors. Matt Shorten is the co-founder and executive director of Trellis Technologies. With over 20 years in sustainability auditing, Matt's a registered greenhouse and energy auditor and technical consultant under the Climate Active Carbon Neutral Programme. His passion for sustainability and tech led him to co-found Trellis. And we'll also be joined today by Janine Cranston as a special guest speaker. Janine has a deep knowledge of the commercial real estate sector in the Asia Pacific region, gained over 3 decades in the industry, and Janine is the head of ESG at Knight Frank, Australia. So today's webinar will cover a lot of ground. Siggy will kick off her presentations today. She'll talk about data being the foundation for effective climate action, talk about challenges in data collection and the importance of tools. Matt will then talk us through and talk about the ESG digital transformation and provide a demo of the Trellis tool. And then lastly, Janine will talk about her experience from a user perspective. After the presentations, we'll have about 10 minutes to go through your questions and I will lead that session. I just want to begin with an acknowledgement of country, wherever you are participating in this webinar from. I'm participating from the Gadigal lands of the Eora Nation, and I'd like to acknowledge the traditional custodians of the land from which we are all participating today. We pay our respects to their elders past, present and emerging. Just a few notes on housekeeping before we start. There was about 100 people accepted, indicated they're going to attend the webinar. If you could please keep your microphone muted to minimize any background noise, but feel free to use the chat for any comments or feedback you have as we go. Now you'll notice that there's both a chat and a Q&A function available, so please use the chat for any comments and please use the Q&A button for any questions you'd like to be answered in the Q&A part of the webinar at the end. So we've allocated time for that. If we want to just test the chat function, if you wouldn't mind, could you just let us know what you would like to get out of today's webinar and pop that in the chat? We'll just test and make sure that that works. Nobody's wanting to get anything out of the webinar today, or I can't see the comments. There we go. Thank you, Jody. Understanding of tools and resources that are available. Mitch, works, exclamation mark. Thank you both. So yes, the chat function works just fine. So please pop your comments in the chat and any questions in the Q&A button. So just lastly, please note that today's webinar is recorded and you'll receive access to the recording after our session today. And we'll also send you a PDF with the slide deck and a request for feedback on how you think the webinar went. Very quick intro, 100% renewables. If you don't know about us as a consulting firm, we partner with all levels of government, business and industry associations to help them decarbonise. And we do this by building carbon footprints and internal capacity, addressing climate risks and opportunities, developing transition plans, setting targets and preparing our clients for reporting. We also help our customers to reduce our customers' value chain emissions by engaging with suppliers. We lead in sustainability communications, offering training courses. We produce the Driving Net Profit with Zero Emissions podcast and videos, and share insights through our blog posts and monthly newsletters. After all the presentations, I'll jump back in and moderate the Q&A session. So I'm now going to hand over to Trellis just for a quick intro from Matt about Trellis, and then we'll quickly also go to Janine Cranston, and then we'll go to our first speaker, Siggy. So Matt, over to you.
Thank you so much, Patrick, and hello everyone. Great to be speaking to you today alongside 100% Renewables and Knight Frank Australia. Trellis Technologies, we're a pioneer and leader in the digital transformation of data related to ESG disclosures. We work with many organisations processing large volumes of information, very much a data as a service as much as a software as a service. So I look forward to sharing a bit more about what we do and how we do what we do later on in the slide deck. Thank you.
And now we'll briefly go over to hear a quick intro from Janine Cranston. Janine.
Thank you, Patrick. Hi, everyone. I run ESG at Knight Frank, which is an English property company with global reach in Australia. We span right across all sectors, and I've got a quite unique perspective on digitising for our clients in the property sector. So I look forward to sharing that case study with you a bit later on, if Matt gives me any time.
Awesome. Thank you for that, Janine. So Siggy will kick off our presentations today. So she'll talk about data being the foundation for effective climate action, talk about challenges in data collection and the importance of tools. Siggy.
Lovely. Thank you for that, Paddy. Like Patrick said, I'm Siggy, and I'll take you through the presentation and why data is the foundation for effective climate action. What you see in front of you here is how we help our clients act on climate change. We call this the decarbonized method. As you can see here on the left, it starts with data. Data really is the foundation for everything else. Data is needed to establish your emissions, which is the baseline of how your organization contributes to climate change. Now let's look at an example. Here, activity data has been collected across scope 1, 2, and 3 emission sources to calculate the total carbon footprint. As you can see, the scope 3 emissions are significant, as is this organization captured a broad range of data when it's defined the boundary, such as their imported material, their end-of-life treatments of sold products, as well as freight services. Overall, this organization's annual footprint is over 173,000 tons of carbon dioxide. Data is also needed to track progress over time. You need continuous data to measure whether you are meeting your climate targets, such as your net zero goals, and how your actions are impacting your overall emissions. Here is an example of a corporate carbon footprint across scopes 1, 2, and 3, and how it tracks over time. In this example, the organization's annual emissions are projected to decrease in line with the science-based targets, achieving a 54% reduction by 2030 from their 2019 baseline. The key drivers of this reduction include increased landfill diversion rates for sold products to lower their end-of-life emissions, as well as sourcing more local or sustainable alternatives for imported materials. To our decarbonization wheel. The other thing that can help you with data is benchmark your performance against industry peers. This comparison can help you identify best practices and opportunities for improvements to ensure you're not falling behind in the transition to a low-carbon economy. This slide shows a comparison between several banks' emissions by evaluating their emissions relative to their full-time equivalent employees, or their FTEs. This is calculated by dividing the total emissions by FTE, which then gives you an indicator that we call the emissions intensity, which is your tons of carbon dioxide per FTE. The table in front of you presents the total emissions across scope 1, 2, and 3 of 5 carbon neutral banks certified by Climate Active. Now, once you've established your carbon footprint, you can use it to engage internal stakeholders in your businesses and start your capacity building in terms of climate response. For instance, you can show your senior leaders where your carbon hotspots are and engage them into action to mitigate these. Or you can use the data to empower employees to contribute to sustainability initiatives. You could create programs that allow employees to monitor and reduce resource use in their departments or the various operations. And I've got another example for you. This is an example of a carbon footprint that we developed for one of our clients, which is a metal fabricator. They take steel and zinc as inputs and turn them into products such as transformers. Now, before we developed the carbon footprint, the business was convinced that electricity would be their biggest emission source. But this is the thing about developing carbon footprints. You don't always know what your biggest emission source is until you actually start calculating their emissions. And as you can see, the biggest emission source for this client has been purchased steel, followed by emissions from transport. So data also helps you assess and address your climate risks and opportunities. By tracking your resource consumption, such as energy, water, and emissions across locations, you can identify vulnerable facilities or operations exposed to climate risks, like extreme weather or rising temperatures. For instance, an energy-intensive facility in a heat-prone area may face higher costs and disruptions. Data also ensures you compliance with legislation, which reduces your risks of penalties or reputational damage, and it gets you insurance ready in general. Data always helps with your climate strategy. It allows you to break down emissions by activity, location, process, which then allows you to identify the areas of operations that contribute most to your carbon footprint. Analyzing resource consumption data, such as energy use, fuel consumption, or water usage, will help you identify inefficiencies and opportunities to improve your processes. For example, your energy data might reveal that certain facilities are energy intensive, leading to targeted investment in energy efficient technologies, process improvements, or renewable energy adoption. Here is an example of a net zero strategy that is aligned with science. It builds on calculating the footprint yearly, projecting emissions into the future, assuming business as usual, and determining opportunities that reduce emissions down to net zero by the target year. And here's an example of a decarbonization strategy that across typical emission sources. The opportunities are staged. For example, this client is upgrading to LED lighting at the moment and will introduce electric vehicles in the medium term and is aiming for net zero waste to landfill in the long term. Now, once you have your baseline, you can use the data to set realistic goals for cutting emissions, like alignment with the Paris Agreement. The data shows how much you need to reduce it and by when. It also helps to track if your climate actions, like energy efficiency, renewable or energy projects, are working, and if not, the data lets you adjust your approach to improve results. In this case example, which is a large food processor, you can see a Paris-aligned pathway and the carbon reduction measures needed to meet the 2030 target. As you can see in this graph, the target can only be achieved by installing solar, being more energy efficient, and by switching to renewables. Now let's talk about disclosures. You may have noticed that governments, investors, customers, employees, and other stakeholders are increasingly inquiring you to disclose accurate data on your emissions, your climate-related risks, and adaptation strategies. If you have accurate data on emissions, resource consumption, and climate risks, you can provide transparent and credible reports to your stakeholders. Now, you might have heard that mandatory climate reporting bill recently passed in Parliament. The first tranche of business will have to report from 1st of January this year, and groups 2 and 3 are following in the next 2 years. This overview shows you who needs to report and when. There are 3 groups all up. The group that you are in determines when you have to start reporting. This ranges from January this year to the financial year 27-28. The staggered approach allows for a phased implementation, giving businesses adequate time to prepare based on their size and capacity. Please note that Group 3 captures quite a lot of organizations, as the threshold here are all organizations over 100 employees and over 50 million in revenue. If you fall under any of these groups, you will need to report your full carbon footprint, inclusive of your Scope 3. And you will need to disclose the financial impact of climate risks and opportunities, and you need to disclose your transition plans that shows how your business will thrive in a world that's tracking towards net zero. At the moment, reporting requirements apply to only if you need to lodge financial reports under Chapter 2M of the Corporations Act, and when you meet the thresholds in criteria indicated on the slide. Apart from mandatory reporting, companies that fall under any of these groups listed have already started to ask their supplier for carbon footprint information to help them with their Scope 3 calculations. So eventually, most of our economy will be affected by reporting requirements. Now the question is, what group are you in? 1, 2, 3, or perhaps you have been asked for climate-related information already by your customers, or it might not apply to you at the moment. We're really keen to find out. If you wouldn't mind answering that question in the chat, that will give us a feel of the audience today. I'd continue and allow you to continue answering that question, please. There's a lot to know about the incoming mandatory climate legislation, which is why we have created a complimentary course to help our clients navigate all the important aspects, such as creating carbon footprints, managing climate-related risks and opportunities, and developing transition strategies. You can access the course by clicking on the QR code on the link on the screen, and you'll get a copy of the slide deck at the end of the presentation as well, if the QR link doesn't work for you at this stage. So we have created a methodology to help organizations disclose the ASRS reporting gap. Our methodology consists of 5 stages. In the first stage, we compare current practices to ASRS requirements within the ASRS pillars as reference points. What we do next is we highlight and categorize the gaps, and we develop a structured action plan with key actions, responsibilities, and timelines. And then we assist you with implementing the action plan. We can also assist you with preparing a trial disclosure report to simulate compliance, test your data readiness, identify any final gaps, and ensure the trial report complies with all the necessary disclosures. And once that's been finalized, we assist with progressive disclosures, updating disclosures, ensuring continued alignment with ASRS or other evolving standards. The implementation of this methodology is supported by very practical tools, such as our ASRS Gap and Maturity Assessment tool and the ASRS Compliance Roadmap. These will be customized to the outcome of the assessments that we've done prior. Now, for many of you on this webinar, a significant portion of your carbon footprint comes from your supply chain. And to manage these Scope 3 emissions, you'll need a comprehensive set of data from suppliers on raw material, transport, product life cycle, and other factors that contribute to indirect emissions, and then work collaboratively with your supply chains to reduce emissions to ensure alignments with your sustainability goals. Now, once you have all the necessary data, you can engage your suppliers to improve their environmental performance by reducing their energy use, adopting renewable energy, changing packaging, or cutting down on waste. Here you see an example of how you can use data to analyze emissions in your value chain. The pie chart on the left is from our work with a pharmaceutical manufacturer and shows the contribution of the scopes to the overall carbon footprint, inclusive of breaking the Scope 3 down into 15 categories as per the GHG protocol. The graph on the right shows the contribution of individual suppliers to expenditure categories for one of our clients. Let's turn our attention to what we want and need our data to be. We all know that data is essential for climate action, but it's tough to get a data that is both accurate, reliable, complete, and assurance ready. And it's particularly tricky if you're creating a carbon footprint for the first time. So let's have a look at some of the challenges that you might have when you're collecting data. Data usually comes in various sources with inconsistent formats and gaps, and you rely on others to provide the information that you need. For example, the facility management team might track electricity usage through a dedicated platform, whilst procurement logs fuel purchases in a spreadsheet. And then meanwhile, your waste data might be collected by an external waste management provider and be available in a different format again. Some of the information you need may even be buried in emails, as I'm sure a lot of you can relate to that. And then there's the human aspect as well. Departments may collect their data or use different standards, making collaboration tricky. Without clear communication, you could end up with an incomplete or inconsistent data set. Plus, some teams might not fully understand why the data they provide matter to your sustainability goals. Even when you do get the data, it may use different units, like kilowatt hours for energy, liters for fuel, and tons of carbon dioxide for emissions. Converting everything into the standard format takes time and can lead to errors. This lack of consistency makes it hard to compile everything into a comprehensive report, increasing the risks of mistakes and delays. For example, trying to compile data from a facility that tracks energy use monthly and another that reports quarterly can lead to mismatches and delay in reporting. And manual data entry only adds to the problem, with the potential for skipped entries or calculation errors that could throw off your sustainability reporting and decision making. Let's have a look at common sources of data so that you can calculate your carbon footprint. There are preferred data sources and sources that are still okay to use, but won't give you the best results or are more labor intensive. I won't go into this here in detail. You will get the PDF of this slide deck after the webinar. But what I do want to point out here is that there are data management platforms out there, such as Trellis, that can help you with automating your data collection. Here is how you can work best with data platforms as well as with your consultants. Your data management platform allows you to have centralized data and real-time tracking. It can help you with automating your reporting. It will also help you with maintaining accurate data. Data management platforms by themselves give you great information, and engaging with consultants will help you putting that information in context. Consultants are able to offer expert guidance, can use the data to create a strategic roadmap, and bring your stakeholders along on the journey. and tailor your solutions to your needs. And with that, I'd like to hand over to Trellis to tell us more about their data management platform. Over to you, Matt.
Thank you, Siggy. Great, excellent. Thank you, everyone. Great again, just to be talking to everyone, and thanks for attending. I think what I'll run through, certainly there's some complementary and overlapping themes in a lot of what Siggy said, and I'm sure you'll all resonate with that as we go through it. And yeah, some great tools there that are 100% renewables are, providing to help organisations get geared up for this transition that we're working through at the moment, and some great live examples, Siggy. Thank you for that. So for the next 15 minutes or so, I will run through these things in varying levels of detail, a bit about us, which I'll build on from my previous introduction, a bit of a look at where we've been and where we're going in terms of that legislative environment and the ESG space and climate space more broadly. Touch on the ASRS challenge and the ASRS opportunity, particularly with a technology lens. We'll then look at some of the key characteristics and benefits of a digital transformation. I'll then do a bit of a deeper dive into some of the Trellis features that are really helping organisations, manage this challenge quite effectively, and then close off with some key considerations and some summary thoughts. Okay, I realise I need to just share my screen. So I'm just going to get that up and running, and bear with me. There we go. Can you all see that okay now? Yeah. Excellent. All right. So a bit about us. So the team, we're a team of very passionate, dedicated, I suppose, multi-skilled, multi-talented individuals. There's around 25 of us based in Adelaide and Sydney. A combination of domain expertise in terms of, the ESG space, assurance, advisory services, also heavily slanted towards data science and AI and machine learning expertise that underpin our software as a service and data as a service, which is a key consideration in this space. In terms of our traction, so we've achieved quite a lot since we launched in 2018. We have over 28,000 unique facilities that we're tracking through the Trellis platform. So that is across scope 1, 2 and 3 emissions. We have over $5 billion in expenditure that's being tracked and links to utilities and other attributes that organisations are grappling with in terms of their reporting. And we're capturing data from over 1,200 different supplier data connectors. And what I mean by that is different suppliers to our customers that are providing goods and services and products, all that may have some impact or bearing on their scope 1, 2 and 3 emissions reporting. So no surprise that the job that is, many of us have been grappling with for many years in this space has been dominated by the use of Excel and more recently the use of Teams in communication. So whilst there's been a myriad of different standards and legislation that have come into this space to help drive and move organisations along, very much as individuals working in the ESG space has been very much around the use of Excel and Teams as an example. And I guess my argument here is to suggest that with the onset of the new standards and legislation coming into Australia, that it is certainly time to evolve the use of those tools into more of a systematic, digitised approach, which I'll touch on. Not to pour too much cold water over Excel. This is an image that I tease our engineering team with quite regularly. Very much an important tool, but we would like to think that there is a transition away from too much of a heavy reliance on Excel, as this diagram might allude to. So in terms of where we're going, as Siggy's outlined, clearly we have a mandatory reporting obligation here in Australia, which came into effect 1 January this year. It's not the first time we've had, reporting obligations here in Australia. I can cast my mind back to 2005 with the introduction of the Energy Efficiency Opportunity Act. In 2007, we had the introduction of the National Greenhouse Energy Reporting Act. And around that, we've had the introduction of a range of different voluntary standards in Australia and internationally, of course. Many of these historical standards have really required organisations to disclose, annual reports. So they've been very much about, what have you done for the last year, very much around the numbers. So what are your scope 1 emissions? What are your scope 2 emissions? What's your energy production or consumption? The same with the climate active, to pick on that one as a voluntary standard, it's been very much about, have you achieved carbon neutrality? What we're seeing in the ASRS or the ASSB S2 standard is more of a focus on what we'd say is in this continual improvement process. So we see a strong alignment with the ISO standards in terms of that planning, doing, checking, correcting. And this slide really looks to set out that, that sort of framework quite broadly. But firstly, it's about organisations understanding their risk, particularly financial risk and opportunities related to the climate. It's about organisations setting goals, realistic goals. It's about organisations setting those goals not just at a macro level always, but down through different business units, different entities, even down to different locations, sites. It's about implementing projects, deploying capital to start to work towards achieving progress towards those targets. And it's about being transparent to stakeholders, internal, external, around that progress and whether or not that capital deployment is working against your goals. So what we see is the macro target setting level and a micro implementation of projects. And this sets up a bit of a gap. So, I mean, one thing that we hear a lot about from our customers that have come to Trellis is really this challenge in linking those macro targets, for example, 50% reduction in scope 1 and 2 emissions by 2030, to those varying actions and projects that are being implemented across an organisation that are adding up to quite a material impact, but in and of themselves very hard to identify and to be able to really prove that investment is working. So this continual improvement wheel continues to rotate, very much focused on that plan, do, check, correct. So very much aligned with the ISO standards. If any of you are familiar with, the environmental management system 14001, things like that, this is where we see a strong alignment in ASSB S2. Key pillars that are underpinning the legislation is really around governance. It's around strategy, metrics and targets, and risk management. And within those 4 pillars, there is quite a bit of complexity, and I'm sure everyone on the call at some level is dealing with some of the complexity that sits within those 4 pillars. The opportunity, I guess, is to really bring some order to chaos. And really where we see our role in this is really honing in on those repeatable processes to bring efficiency, accuracy, and more of that real-time disclosures to your overall organisational performance. And I should point out too that whilst emissions disclosures is the end game, there is significant opportunity for your organisation in capturing this information and driving overall reduced cost in terms of your overall performance. So we're talking about efficiency in terms of emissions, in terms of resource use, in terms of waste usage, and certainly your organisation's spend. So Trellis Technologies, we focus very much again on these repeatable processes and making that very automated. And the sort of things that you can expect from that is automated data processing. So we have a strong focus on automating that sort of end-to-end translation of the kind of information that Siggy referred to, so that mixed format, sometimes unstructured data. So our job is very much to bring those mixed format information into a structured, validated form so that it can be applied to different emission factors and ultimately presented back. And importantly, there is that chain of custody in terms of the source data, linking it to our methods and factors, and then obviously giving access to those original pieces of source information, so being assurance ready. Tracking capital deployment and the effectiveness of those projects that you're implementing across your organisation, very important. So a key pillar or a fundamental aspect of the AASB S2 standard is about that capital deployment and is it being effective. So certainly tracking your different actions and projects and making sure that they are pushing you towards your targets and they are cost effective. Materiality tracking, so obviously very important to maintain that and understand how material different contributors are to your footprint, and that's certainly our job, is to continue to track and highlight material contributors to that. Data security, fundamentally important. We are an ISO 27001 certified organisation, so data security is a centrepiece for us. Very important, as is the continual update of emission factors and being able to access relevant factors depending on the kind of industry that you operate in. And open data. And what I mean by that is making sure that, a system like Trellis can extract, validate, interpret lots of your information. It can add a lot of value in terms of insights to what we're seeing across your organization. Importantly, what we need to be able to do is expose that back to your organization. So rather than us holding data, in our servers and databases, etc., we need to be able to expose that back to your organization so that you can make use of it. We're seeing a trending towards, data warehousing, data lakes, and important that we're able to push our information back into those environments so they can be used not just within the Trellis interface, but across your organization more broadly. So what this on the left sets up, focusing on these repeatable processes, this continuous data that we can continue to intercept, process, and validate, is this sort of support and serve mentality here that we're very strong on. So that is supporting the likes of 100% Renewables and others that are providing those very specific, tailored solutions to your organisation, enabling them to be, work in a symbiotic way. So ensuring that we're working together and supporting and serving each other's functions. So there's a strong, very strong part of the equation there. In terms of this digital transformation, this slide's really to illustrate the maturity curve, or what we call the maturity curve in this digital transformation. So we link productivity and pace in the ESG space with digital maturity. Our role is to get our clients up to this very system-centric approach. And some of the characteristics of being up at this end of the curve can really be around high automation. So again, as I mentioned, being very focused on automating that data capture, that data processing and interpretation, enabling high scalability. What I mean by that is enabling you to have providers, suppliers that change, data formats that change, and ensuring that our systems can cope effectively with that change, which we very much can, and also be able to scale with your organisation as your organisation changes. Our system needs to reflect that throughout your reporting periods. Medium to high interaction, very important. And so you mentioned about collaboration, and I'm sure all of you on the call have experienced some of the challenge in this previously. And as sustainability does, get lifted up that hierarchy of important matters for organisations, the importance of that interaction and stakeholder engagement is becoming more and more critical to the process. So with our data, as an example, we're typically procured through an environment or sustainability function, but very quickly we have the likes of asset teams, facility management teams, finance teams interacting with our data set. So really important to get people working across the same data and getting value from the information that we're able to extract, validate, and provide insights into. In terms of targeted insights, the sorts of things that we can collect from your information, is really looking at those trends over time, looking at how different locations, facilities, meters even are performing across different resource types, being able to provide exception alerts, so us tracking, things, and if we're seeing a change in something outside of what we'd expect, we can alert you to that. We've had a lot of examples of clients that have benefited from that, even through comparing, a bill that they're getting in January this year to January last year, finding things like swimming pools that have malfunctioning pumps and are pumping water into the sewer system, costing a lot in terms of water bills, malfunctioning BMS systems, malfunctioning HVAC systems, zero consumption meters, and having fuel cards, for example, that they're spending money on card fees but not activating those cards or using them for fuel purchases. So a lot of data that we interact with that can lead to insights and exceptional alerts across not just emissions performance or resource use performance, but also how your organisation is spending money on key utilities. Other characteristics around data access, so I mentioned about this, non-siloed approach. That means we are taking that data, doing what we do with it, but exposing it back to your organisation through APIs and other mechanisms. Data security, we've touched on that. And lastly here, around this product evolution. So as the market evolves, as your needs evolve, as technology evolves, it's very important that organisations like us are on the forefront of that and engaging with you very closely to ensure that product continues to evolve to meet your needs now and into the future. So that's if we're up this end of the curve. If you're down here on this end, and you can have a think about where you may be, you'll get a copy of this deck afterwards, of course. Down this end, we're talking more, you're probably using Excel. It's what we call quite decentralized data. Perhaps you've got questionable data integrity. It's not easy to tell where data gaps are. I'm not sure what's estimated, what's actual data. As a consequence, you've got quite a limited sort of problem scope, typically low engagement and trust, and very much that scalability barriers. So as I said, you'll get a copy of this and have a think about where you might sit on that maturity curve. In terms of the actual landscape, so I mean, if we look at scope 1 and 2 emissions here, and then we've got the upstream categories 1 to 8 under the Greenhouse Gas Protocol, and then the downstream activities 9 through to 15. Really looking just to highlight here that, and as Siggy touched on, we are seeing a lot of scope 3 accounting done through financial records. So that could be something like your general ledger export, where we're aligning different spend categories to emission factors. And whilst that is perfectly acceptable at this point, we do expect a trend towards more activity-based accounting across all scopes, particularly in the scope 3 space. You can see here these green squares. So this represents where we're currently capturing and very focused on activity data. So typically scope 1 and 2, we will bed down on that activity data where we're actually collecting data related to weights or units or volumes that's consumed, and typically through financial records to link spend and other things. When you get into these sort of black boxes here, this is typically areas that we are still, focusing on that spend-based accounting. But over time, we would expect, particularly as procurement pick this up and start driving more requirements of suppliers to get more detailed information about the products and services they're offering. We'll continue to track financial records, and I'll show you a bit about a tool that we've developed that can make that a very efficient process, which is this one. So to help organisations deal with this scope 3, general ledger extraction, we've developed a machine learning based tool that basically enables you to drag and drop an export from your finance system. So if you can imagine your general ledger in your finance system could be 20, 30, 40,000 lines long. You can simply grab that file, drag it into our user interface here, and basically get the system to extract line item level data from that file and align your different GL cost codes and descriptions to those relevant emission factors and categories. And it can do it very automatically. It can take a couple of minutes, up to maybe 10 minutes, depending on the size of that file. But very much we're about aligning those different spend categories with those appropriate emission factors that some of you might be familiar with through some of the accounting rules around the Climate Active framework. So that's a really exciting tool that we've brought in recently, and we'd love to share that with you in more detail post this call. Another one that I'll touch on is this target forecasting and action interface that we have. So this enables organisations to really set up those future targets and track their progress towards those targets, and certainly implement or switch on and off different projects or actions that they may be looking to implement. So this is very much aligning with that requirement under the ASSB to disclose your capital deployment and the impact of that capital deployment on reducing your emissions. So we can set up different scenarios, different projects across different timescales to really monitor the progress that you're making towards those targets, and importantly ensuring that any kind of feasibility that's been done in terms of the actions or projects that you're implementing are actually stacking up to the return on investment that you were promised at the start in terms of payback periods and things like that. In terms of risk mitigation, so a key element of the ASB is around risk management, and just to highlight some of those areas where we can certainly help mitigate those risks. So define roles and responsibility, and key person risk is a critical one. So having that sort of system sitting there that's working, day in, day out, to capture that data, process, validate, interpret it, store it, provide access with it to your organization is super critical. Violations of data privacy and security is a risk. That certainly is one that is very high on all organizations' agenda. So you are wanting to make sure that the data capture and processes of transferring information is very much captured by those various security standards like ISO 27001. Another risk is lack of access and transparency of reporting, which is typical when you're using multiple spreadsheets. So with Trellis, we have an unlimited user access rule for our customers. We certainly have a lot of third-party access in terms of consultants and auditors, and very much a centralised access and storage capacity, all here in Australia, that is very accessible, and linking that chain of custody I mentioned earlier around that source data through to calculations, reporting, and essentially establishing you for audit readiness. So linking that source data to calculations and reporting. And the other one, which I've mentioned a few times, is this capital deployment and return on investment tracking. So making sure that that live information is coming through your billing profile and other sources to show that you are actually making progress towards your targets, and that capital is being put in the right areas to achieve that. So to summarize, I guess, what I've covered here today, probably my 3 takeaways to really highlight with you are, firstly, engaging broadly across your business is critical, and this builds on what Siggy's mentioned. It's no longer just an ESG manager issue. This is an issue that is, on the front line of, CFOs and finance teams and other players in your organisation, such as IT teams and facility and asset managers. Secondly, it's not a user interface issue. So this is very much about a systematic response that's required under the new ASSB standards. I would encourage you to think about a holistic systems approach to this that drives business outcomes, not just in emissions performance, but your finance performance as well, around the way that you interact with the products and services that you use to drive your business. So it's very much a systems issue and opportunity, and data. Thirdly, there are multiple and tangible benefits from implementing a system of data governance, which I've touched on. But again, very much a systems focus should be what you're thinking about in moving this forward. So guys, thank you very much for listening. That was a bit of a whirlwind, but I look forward now to handing over to Janine from Knight Frank Australia, and to any questions that might arise later on in the session. Thank you.
Thanks, Matt. Hi again, everybody. I'm just going to share my screen, so bear with me just a moment.
While Janine is sharing that, if I could just encourage, if you have any questions that have popped into your mind from listening to Matt, or from hearing from Siggy earlier, or that pop into your mind whenever you're listening to Janine talk through from a customer perspective, if you can pop them into the chat, and we'll hopefully be able to get to them at the end of this. So back to you, Janine.
Great, thank you very much. So you can all see my screen. I will keep it sharp because it'll allow some questions at the end. And thank you to Matt and Siggy for giving me such a good setup. I'm going to take you to a different viewpoint now, because after a global search for an ESG data management and reporting solution, Knight Frank Australia decided to go with Trellis, and that's proven to have been a really, really good decision. So I'm just going to give you the property viewpoint over 5 or 6 slides in more or less a case study. So I'll give you an intro into Knight Frank if you've not heard about us. I'll intro my lovely ESG team, and then so many of the reasons why these next 3 questions have already been answered are there, but I'll give you the more granular perspective. So why is ESG important to our customers? Who are they? What are the challenges? And why is a digital transformation critical? So first of all, I came to Knight Frank coming up to 3 years ago, but I've spent 30 years in the property industry, but very much on the transactional side. And then I decided to make a change and do some of the heavy lifting. So Knight Frank has worldwide 272 offices, and here we have 31 offices and just over 1,000 people. We recently, you may have seen in the news, joined forces with McGrath, and we've got an affiliation with Bailey's in New Zealand. And we're what we call a full service real estate agency across all sectors of assets. And the service capability that you can see there. So I've come from a transactional background and moved into a consulting role. My team here shown have been involved very much in the environmental end. I've inherited people who are very practical around built assets. Now, Knight Frank in Australia manages nearly 2,000 assets, and it was important for me coming to this role to have impact because the built environment globally accounts for 40% of the world's greenhouse gas emissions. So there's plenty of work to do. So we do a lot of neighbours ratings. We help our clients with neighbours improvement plans, decarb pathway reports, carbon neutral certification, EV assessment and strategies becoming more prevalent. We help our clients manage energy, water and waste on their assets, green lease advice. The lanes are quite broad and they can broaden very quickly. We are doing more and more work in social and governance, but for this particular discussion, we're really focusing on the environmental. There are a really good bunch of people doing really high quality work. So with those items in mind, I have found this particular piece, which I take with me in hard copy, and pop it on the desk for a discussion with clients who have assets, who may not have thought much about ESG, and they still exist in property, and those who do, and we work right across the spectrum. But something as low tech as this continuum allows them to see where they are and make a choice, and then feel as if they're not being ambushed in a conversation, quite frankly. And it's been a very good conversation starter along the lines of the different items or the different maturity levels and what sort of things can be done. And you'll see here that digitized sustainability data capture and reporting features right across the spectrum. Okay, so that's a bit of a segue into why is ESG important to our customers? And when I first began, I did a really intense period of understanding what our customer needs was. And quite frankly, it was a lot around investor demand for data and investor demand for action around ESG. And we had at that stage access to a system, ESG data management and reporting system in UK, but we made a choice that we needed one locally, and we went through a global search, a procurement process, and it was delightful and remains so to find great technology in our own backyard. We've deployed that, and we are selling and onboarding to our clients. And I would say, why is it important to them? Well, mandatory sustainability reporting has been like a Bunsen burner on action. And there are private clients in our midst who are Group 3 or beyond, who might think that they do not need to report or provide data on their assets until you tell them that as part of the supply chain of bigger groups or targeting their leasing or selling of their assets to groups who need that information, they simply won't get a seat at the table or access to them without it. And I've seen many a time that, the colour drains from the faces when the penny drops and they get it. So that's a very commercial and pragmatic reason why they would want data. The other is around tenants no longer want to be or no longer can be occupants in a building if they have a net zero journey and the asset puts them at risk. And we've seen many examples of that, ourselves included. So we now have a global net zero commitment and an SBTI commitment, and we couldn't be in a building that didn't support that. We're also seeing that now baked into leases. So the performance of assets. Now, you can't drive performance of assets without what Siggy said. It starts with data. And the number of times that I have heard it, I think it's now reached a really serious level of consciousness in the property sector, and the voraciousness of data acquisition is here. So I wrote some notes when Ziggy was talking because they were such pertinent points to what I wanted to speak to you about. You know, data is the foundation of everything we do, and we absolutely see that in property. And without it, you can't measure, monitor, or improve asset performance over a period of time. You know, we begin by benchmarking the data. We've onboarded anywhere between a single asset and nearly 100 assets by client, and found some challenges along the way. But then you can see the clients start to get comfortable with the very easily accessible and user-friendly interface, and their journey and adoption of data for driving performance begins. So for us, it's about data management and reporting, but the secondary benefit we get in property is that the insights that it can provide our clients are numerous. And the other one that Siggy mentioned was the climate risks of assets. And you can imagine we're doing quite a lot of work in here. I think it sits on this continuum, climate risk analysis. The rate of demand for climate risk analysis is again growing significantly. We need data for climate risk analysis and reporting and taking action. The other thing that the data that Trellis provides us gives us is a sound case on return on investment. And while the property industry has, or as a result of the property industry seeing quite lean times in the last couple of years, showing how the asset can benefit through improved performance, through a bigger pool of interested lessees, through a bigger audience to sell to, is all reason why you would take the stand in property. I did mention MSR as a driver, and you know that most of the economy will be affected. And the other thing is, Siggy mentioned the accuracy, reliability, completeness, and assurance. And we made a conscious choice to have those in the platform that we chose, in order that our clients have those at their fingertips. I heard a comment yesterday, and it makes sense to this group, I'm sure, about fat-fingered data. It is no longer possible to do what we've got to do in property on spreadsheets. And I see that. I see clients boiling their brains, frustrated and challenged by, bless them, Excel spreadsheets. They have their time, but we're past fat-fingered data and into the age of digitization. I think that's covered most of it. I did just, I'll stop sharing because I think I've got to the essence of the case study. Matt, if there's anything that you think that I should add in addition to that, and look at that, 1:30. Patrick, is there anything else you want to hear?
Yeah, to be honest, Jean, I could continue listening to your story about how, I mean, ultimately I think it's the customer's perspective on how you bring advice and tech together and actually benefit from it, that actually tells me that I'm sort of working in the right space, doing kind of the right thing. So yes, you could continue talking about it, but yes, I am conscious that it is 1:30. Most people who joined at the start of the webinar are still here, so I think I'm happy to sort of continue, and if people do have a few questions, burning questions that they've got that they'd like Janine or Matt or Siggy and myself to respond to, I'm happy to take those questions.
I would take them here and or later if people have to jump off, Matt. I'm happy to hear from them. Sorry, Matt, Patrick.
Yeah. That's fine. At this stage, we don't have any, or at least I don't see any questions in the chat. I'm happy to give it another minute or so. If people are sort of happy, then we can just make some closing comments and leave any questions to later if people want to come back to engage with Matt or to yourself, Janine.
Great. I'm happy to flick around a copy of my slides if they're of any use to anyone as well.
I think we do. Okay, so Mitch is asked, are there tips or efficiencies that you can discuss from having a large number of suppliers and in multiple jurisdictions? That might be a question that you might be able to respond to, Matt.
Yeah, sure. So yeah, Mitch, thanks for the question. So look, it's yeah, I mean, if you've got a large number of suppliers in multiple jurisdictions, your first thing is getting that data plan together. So, you know, hoping you've got some form of data plan or base of preparation document. So the first thing you want to do is sort of understand the lay of the land, the landscape in terms of the data flows through your organization. We've had a lot of success in capturing data through finance systems. So we typically intercept probably 80% of our data for clients directly through their finance system. So that's coming through to us in an automated way as, you know, bills and things like that are issued to you. So you may have one finance system, you know, some of our clients have got several across different entities and there's some complexity in that part. But ideally, it's going to get back to that flow through of information through your finance system that we're looking to intercept largely. In terms of your jurisdiction point, I mean, really the data shouldn't matter. I mean, again, we've designed our system to be able to deal with that mixed format, mixed jurisdictional information and to process, validate and interpret that. It's really then aligning that information with the emission factors relevant to your jurisdiction. So I hope that helps, but certainly, yeah, we've been through it a bit, so happy to keep talking post this session on that.
Yeah. And it's a good, it's a good sort of, if we go back to your presentation, Matt, where you're sort of highlighting that sort of shift from spend-based accounting to activity-based accounting, you know, it's where that, you know, you start to pick up on those sort of interjurisdictional differences that you might not necessarily pick up with spend-based data.
Yes, exactly. Yeah.
Laurie is asking, is a demo of the Trellis tool available on your website?
Look, it's not. I don't believe. I can find that out for you. I don't think it is. But more than happy to give you we can send you a video, or we can do one. One-on-one's probably better to talk you through it. But yeah, we can certainly give you access to one.
Very good. Okay.
I would recommend them too. They work pretty well.
Thank you, Janine.
Thank you. Okay, so look, I don't think there's any other questions at this stage. We are obviously running this webinar a couple more times for different groups over the course of this week. So yeah, obviously, I know a couple of people in here from local government may want to come along tomorrow as well. If you have any other questions, that would be great to hear. But any sort of closing words from you, Matt, before we wrap it up?
Look, not specifically. Thank you, Patrick. Just other than to say thanks everyone for attending and thanks for having us along.
Likewise. Yeah. So yeah, thank you, Matt, and thank you in particular, Janine, for your insights from Knight Frank's perspective. It's been extremely valuable. And yeah, I'd just like to thank everyone who attended the webinar today. Thank you also, Siggy, for presenting and stepping in at very, very short notice for Barbara today. Did a fantastic job. And yes, hope you all have a wonderful rest of your Tuesday.
Thank you and goodbye.
Thank you all.
Goodbye. See ya.
Thank you all.